To the average person, I just burned value. I just destroyed wealth. To the Federal Reserve, I just did exactly what they do every single day through inflation. You have been brainwashed to worship this paper. You work for it. You bleed for it. You save? Italiano. And while you are saving it, the architects of the system are printing it into oblivion. They tells you, debt is bad. Pay cash. Live within your means. That is the slave manual. That is the operating system designed for the labor class. The capital class operates on a different physics. They know that cash is trash. They know that debt is tax-free money. They know that if you borrow millions of dollars to buy assets that inflate, you're effectively shorting the currency of a dying empire. The 1% use OPM other people's money. They use the bank's money to buy the asset. They use the tenant's money to pay the debt. They use the government's tax code to wipe out the taxes. And they use your savings, which you deposited in the bank, to fund the whole thing. Today, on Wealth Architect, we are going to perform financial alchemy. We are going to deconstruct the BRRRR strategy used by billionaires. We are going to break down the BRRRR method for infinite returns. And I am going to show you how to stop being the victim of the banking system and start being the partner. Welcome, Bike. I'm Ben. Here, we don't save money. We multiply, Italiano. Before we touch the tactics, we must break the conditioning. Why does your father tell you to pay off your mortgage? Because he grew up in a different monetary era. The 1971 shift. Before 1971, money was tied to gold. It was stored of value. Saving made sense. In 1971, Nixon severed the gold standard. The dollar became fiat currency. Since then, the dollar has lost 98% of its purchasing power. The consequence: if you save cash, you are holding a melting ice cube. You are losing 3 to 5% or more of your wealth every year to inflation. Savers are losers. Not morally, but mathematically. The architect's hedge. If cash is trash, what is debt? Debt is a short position on the dollar. If you borrow $1 million today at a fixed rate, you owe $1 million. In 20 years, due to inflation, that $1 million will have the purchasing power of $500,000. You effectively paid the bank back half the value. The bank is the loser. The BRRRR is the winner. This is why the rich carry massive mortgages. They are letting inflation pay off their debt for them. Now, do not go run up your credit card at Gucci. You must distinguish between the two types of leverage. 1. Consumer debt, the cyanide, used to buy liabilities, cars, clothes, vacations. You pay the interest. It destroys your future cash flow. Verdict: avoid like the plague. If you have this, you are in a financial emergency. 2. Productive debt, the rocket fuel, used to buy assets, real estate, business, equipment. The asset pays the interest via rent prof. It increases your future cash flow. Verdict: get as much as you can safely manage. The litmus test before you sign the loan. Ask, who pays for this? If the answer is me, don't do it. If the answer is my tenant or my customer, sign the paper. Okay, Ben, how do I get infinite returns? We use a strategy called BRRRR. Buy, rehab, rent, refinance, repeat. This is the ultimate OPM blueprint. Let's walk through a deal. Step 1. By the distressed asset, you find a dump. House worth $100,000, ET needs work. You buy it for $70,000 using a hard money loan, short-term OP. You put $0 of your own money if you negotiate, right? Or maybe $10,000. Step 2. Rehab force appreciation. You borrow another $30,000 to fix it up. Total loan, $100,000. Total value after repair RV $150,000. Step 3. Rent cash flow. You rent it out for $1,500 a month. Step 4. Refinance the magic. You go to a bank. You say, I have a house worth $150,000. I want a long-term mortgage. The bank gives you 75% of the value, $112,500. You use that $112,500 to pay off the old $100,000 loan. You put $12,500 cash in your pocket. Step 5. Repeat infinite return. Let's look at your position. You own a $150,000 house. You have a tenant paying the mortgage. You have $0 of your own money in the deal. You actually walked away with $12,500 tax-free cash. The return calculation cash flow. Your investment equals ROI. $300 per month / $0 invested equals infinite return. This is how you build a portfolio of 100 houses without winning the lottery. You recycle the same money over and over again. You are using the bank's money to buy the asset and the bank's appraisal to pull your money back out. But wait, it gets better. Let's talk about taxes. If you work a job, you pay 30 to 40% tax. If you sell a stock, you pay 20% tax. If you borrow money, you pay 0% tax. Date buy, borrow, dilute. Buy. You buy assets, real estate, stocks. Borrow. As they grow in value, you do not sell them. You take loans against them. You need $100,000 for a lifestyle expense. Don't sell the house. Refinance it. The $100,000 loan proceeds are not income. They are tax-free. This is the part nobody talks about. The step-up in basis. The step-up explained. If you bought a house for $100,000 and it's worth $1 million when you die, if you sell it the day before you die, you owe tax on $900,000 gain. If you die and leave it to your kids, the IRS steps up the value to $1 million. Your kids can sell it the next day for $1 million and pay zero capital gains tax. The debt you took out, it is paid off by the estate tax-free. The architects pass wealth to the next generation without the IRS taking a cut. The employees pass a 401k that gets taxed to death. But Ben, the bank won't lend to me. I don't show enough income. Stop thinking like an employee. Employees rely on W-2 income to qualify for loans. Investors rely on asset income. The secret weapon, loans, debt service coverage ratio, visual, graphic of a building on a scale. A DSCR lender does not care about you. They don't care about your job. They don't care about your tax returns. They only care about the property. The calculation. Does the rent cover the mortgage? Rent, $2,000 ar mortgage. $1,500 DSCR igual a 1.33 if the ratio is above 1.0 or 1.2. They will give you the loan. You could be unemployed. You could show a loss on your taxes. If the deal works, the bank funds it. This unlocks unlimited scale. You are not limited by your salary. You are only limited by your ability to find good deals. I have to be responsible here. Leverage amplifies gains, but it also amplifies losses. How do you sleep at night with $5 million in debt? You build a bulletproof vest. Rule 1. Cash reserves. For every property you keep 6 months of payments in the bank. Do not touch it. This prevents you from going bankrupt during a vacancy. Rule 2. Fixed rate debt. Commercial loans often have adjustable rates. Balloons? This killed people in 2008 and 2023. As an architect, try to lock in long-term fixed debt 30-year whenever possible on residential assets. You want to make inflation your friend, not your enemy. Rule 3. Cash flow, not appreciation. Never buy a property that costs $2,000 a month but rents for $1,800. Just because you think values will go up. That is speculation. That is how you die. Only buy if it puts cash in your pocket day one. The system is rigged. It is rigged against the saver. It is rigged against the employee. But it is rigged in favor of the debtor and the owner. You have a choice. You can stand on the sidelines, complain about the system, and watch your savings rot away to inflation. Or you can learn the rules. You can pick up the tools of the alchemist. You can use the bank's money to buy freedom. You can use the tenant's labor to pay for your legacy. You can use the tax code to protect your family. This isn't about greed. It is about sovereignty. It's about taking control of the levers of capitalism so they work for you instead of on you. I want you to shift your identity today. The leverage audit. Stop looking at your debt as a number to be eliminated. Look at it as a tool to be optimized. The challenge. Do you have a lazy equity situation? Do you have a house with $200,000 in equity, sitting dead? Could you do a cash out refinance, tax-free, and use that money to buy a rental property cash flow? Tell me in the comments. I am ready to use good debt. Or tell me why you're scared. Let's talk about the Fiat. And if you want to know how to find the dump houses to execute the BRRRR strategy, you need to subscribe. Next video, we go hunting. Hit the bell. Class dismissed.